Not all gold ETFs are created equal. There's one that provides for physical delivery to shareholders. Welcome to Alpha Rock ETF Insight. I'm Brian. I'm an investment advisor. I manage portfolios for investors like you. And today we're going to take a deep dive into the VanEck Merk Gold ETF, ticker OUNZ. Gold has served as a store of value and a medium of exchange for thousands of years. It's motivated entire societies, torn economies to shreds, and determined the fate of kings and empires. Gold continues to serve as a store of value today. It's a safe haven investment during times of financial market turmoil and a hedge against the inflation of fiat currencies. As an investment, gold can enhance portfolio diversification, and it has outperformed traditional asset classes like stocks, bonds, and U.S. Treasuries over the last 20 years. ETFs are a convenient, low-cost way for investors to gain exposure to gold without having to worry about storage and security. Gold ETFs track the spot price of gold extremely well, at a small cost to shareholders. The so-called spot price of gold is the current market price for 1 ounce of gold that's available for immediate delivery. Think of it as the raw value of gold on the global exchange at this exact second. This 5-year chart of the world's largest gold ETF, GLD, shows how closely it tracks the spot price of gold. Gold ETFs are extremely efficient, and gold ETFs are remarkably similar in terms of their performance and ability to track the spot price. Here's another 5-year chart showing OUNZ compared to the 3 largest gold ETFs. The performance is so similar across all 4 ETFs that at first glance, you might think the chart is only showing one security. But actually, all 3 ETFs are shown here. Because they all track the spot price so well, their performance history is essentially the same. Even after a 5-year period, the difference in performance between the highest performer and the lowest is less than 4%. The VanEck Merk Gold Trust was launched in May of 2014 and now has about $2.5 billion in assets under management. The fund's sponsor or issuer, that's the company that creates, manages, and markets the fund, is Merk Investments. The custodian, that's the fund administrator, and the record keeper is J.P. Morgan Chase Bank. And the trustee, that's the legal guardian who ensures the sponsor and the custodian are doing their jobs, is the Bank of New York Mellon. Comparing the size and expense ratio of OUNZ to the 3 largest gold ETFs, all 4 funds are large. The smallest of the group is OUNZ with about $2.5 billion in assets under management. The largest fund, GLD, is actually the most expensive, with an expense ratio of 40 basis points or 0.4%. OUNZ and IAU carry an expense ratio of 25 basis points or 0.25%. The cheapest ETF is the Aberdeen Gold Shares ETF at 17 basis points. OUNZ is unique not just among these 4 ETFs, but among all gold ETFs because it offers investors the option to take physical delivery. You might be asking yourself, why would I want to take physical delivery? I spoke to the fund manager Axel Merk about this. He said the number of investors actually taking delivery is relatively small, but they do get requests on a fairly regular basis. The difference between OUNZ and its competitors is really about tangible ownership versus synthetic exposure. With most ETFs, you get synthetic exposure. With OUNZ, you have tangible ownership. Many investors view gold as the ultimate hedge against systemic risk. It's held by institutions, central banks, and investors around the world as part of their asset allocation, and as a store of value and as a safe haven asset to secure a portion of their wealth in case of emergency. The chances of a currency collapse or systemic risk are low, but they're not zero. Wise investors try to consider all possible outcomes. In a systemic crisis, you might want to have your gold in your private safe, a local bank, or bury it under your vegetable garden. I'll explain the process of how investors can order delivery in just a minute, but for now, let's consider some other reasons you might want to at least have the option of taking physical possession of the gold from your ETF shares. Counterparty risk. Most gold ETFs are essentially paper receipts. You're trusting the custodian or brokerage firm to actually have the gold, and you're trusting that the financial system will remain stable enough to be able to sell your shares to another buyer. In today's world, those risks are small, but again, not zero. Taking physical custody removes the brokerage and the clearinghouse from the equation. So, how can you be sure your OUNZ shares are actually backed by physical gold? Proof of reserves is critical. It changes the conversation from, boy, I really hope the gold is there, to, I can be sure my shares are backed by physical gold. Merck Investments, the fund sponsor, achieves this through rigorous layers of accounting and custody. First, OUNZ shares are allocated. That means, unlike your bank account, which is just a digital entry on a balance sheet, unallocated, OUNZ uses allocated custody. When you own a share of OUNZ, there's actual gold metal held in a vault facility, primarily in London, backing every share of the fund. Every gold bar in the London vault system is assigned to the VanEck Merk Gold Trust by a unique serial number which gives the bars specific ownership. Another part of the process is called off balance sheet. Because the gold is allocated, it's legally ring-fenced. That means if the custodian or Merck Investments goes bankrupt, creditors can't touch the gold. It belongs to the shareholders, not the company. There's also a daily bar list. Every business day, Merck publishes a full bar list on their website. It's like a receipt. Merck lists the serial number of every 400-ounce bar held in custody, the refiner's name, the gross weight, the exact purity, and the fine weight, the actual gold content. You don't have to take my word for it. You can go to Merck's website, download the bar list, and see the serial numbers and all the other identifiers for all the gold held in the vault. Finally, there's third-party audits. These are actual physical counts done by an unaffiliated entity. The auditor physically counts each bar to verify the gold is there, and it's owned and assigned by a serial number that matches the fund's ledger. Okay, that was a bit of a diversion. Let's get back to the question. Outside of a financial system meltdown, why else might you want to convert your OUNZ shares to physical gold? Oddly enough, tax efficiency. In most cases, even if you take delivery of gold from your IRA, it's not considered a taxable event by the IRS. It's not a sale, so there's no capital gains tax. Instead, it's treated as an in-kind distribution. So an investor can hold OUNZ in their brokerage account for many years, watch it appreciate, then take delivery of the physical bars without realizing the gains. They only pay the tax later when they decide to sell. There's another unexpected reason you might want to take physical delivery of your gold shares: to save on transaction fees. If you're a relatively small investor who wants to buy physical gold, dealing with your local coin shop is going to be cheaper than buying OUNZ and then taking physical delivery. However, if you're a high net worth investor, a very high net worth investor, you may want to transfer your paper gain into a physical legacy without triggering an immediate tax bill. OUNZ offers a bridge. The process for taking delivery seems pretty easy. I haven't done it myself. I don't have any clients who've done it either. But according to the fund's website, it's a three-step process. First, the investor submits a delivery application to Merck Investments and pays the exchange fee. The application and the fee are non-binding, and they're refundable until you actually submit your shares to the trustee. After your shares are received by the trustee, the gold is packed, insured, and shipped to the address you put on the delivery application. Now let's talk about why I think gold should be a core allocation for many investors today. By the way, if you want a full in-depth analysis on gold and other areas where we're investing, download my 2026 investment outlook. It's available for free on my website, alpharockinvestments.com. Just click on Insights and then Quarterly Outlook. So here's a quick overview of why I'm using gold as a core allocation in my own portfolio and for my clients. With the decline of U.S. monetary dominance, we're living through a historical change in the global monetary system that will have long-term implications. The global reserve system is diversifying away from fiat currency to a mixed regime with gold in a dominant role. Gold is the global standard for value preservation and protects against the devaluation of fiat currencies. Over the last 25 years, at an average inflation rate of 3%, the US dollar has lost 48% of its purchasing power. Gold is the ultimate inflation hedge. U.S. government debt levels are unsustainable, and the U.S. Federal Reserve has only two choices: maintain a low interest rate policy so the Treasury can continue to borrow and fund the deficit, or raise interest rates to fight inflation. I think their preference is obvious. They'll choose option one: keep interest rates low so the government can continue to borrow. This means inflation will remain elevated, driving demand for gold and other inflationary hedges. We've seen this happening already. Global demand for gold bars, coins, and ETFs is rising at the highest level in history. Foreign central banks have been buying gold at a record pace, and the gold holdings of central banks around the globe are now larger than their U.S. Treasury holdings. Traditional allocations of 2 to 5% are not accounting for the fundamental change in the global monetary system. So, a minor shift in investor allocations towards gold could cause significant price increase. Even from today's all time highs or near all time highs, a major shift in investor sentiment could drive prices to levels that are hard to imagine. If you have any questions about the ETFs in your portfolio, reach out to me anytime. If you want to learn more about how I manage my client portfolios, you can download my quarterly investment outlook and you can subscribe to my weekly client letter. Both are free at alpharockinvestments.com.